All right. Good morning, everybody. We're joined just like yesterday with Tony Greer from TG Macro. Tony's talking to us about the equity markets. How's it going this morning, Tony?
Great, great. How you doing, Mike?
I'm good. I'm good. Yesterday we were talking this time yesterday, as a matter of fact, and Amazon was trading about 1960, and I kind of sarcastically said, we'll be at 2000 in about 5 minutes. And while it was a bit more than 5 minutes, we did this morning cross 2000, and right now we're trading 1999. It's a pretty amazing move. And you were bullish yesterday. What are your thoughts there?
Yeah, I mean that was just a short term, that's just the momentum trader in me looking at the stock and seeing buyers around and not much on the way of an offer or a technical resistance point. In the big picture, it looks like big tech is really flipping the bird to the authorities right now. Bernie Sanders comes out and says taxpayers shouldn't have to subsidize employees at a company owned by Mr. Bezos that's worth $155 billion. Mr. Bezos points at the stock price and says, "Excuse me, have you seen Amazon at $2,000 per share?" And has an actual rebuttal for Bernie Sanders to that, which I think is pretty outrageous. Same thing with Google. The president, put Google on the radar screen in terms of, searching, altering searches. Their CEO said that he would not show up to a Senate panel hearing, and Google still bid the highs. They do not care who is coming after them or about what. So with thin attribution to this rally like we're seeing, it's not really shocking to me that we're seeing a down day like this with, emerging market stress picking its head up again. When I see the S&P breaking above 2,900 with the VIX still at 12 and a quarter, we're still talking about, that risk premium that is pricing in. And it's for days like today, where you see the Italian bond market starting to rally again. Rates starting to rally in Italy with the bond market coming apart. That is happening against weakness in the Turkish lira. It was difficult for me to go along with the broader market equity rally yesterday with European banks still on their ass. They're still on their ass this morning. It's the usual suspects over there: Banco Santander, SocGen, Deutsche Bank.
So why
Everybody.
hasn't that started breaking? But why hasn't that fed over to U.S. equities? Because in the past, like we're seeing significant moves in stress in EMFX with dollar MEX, dollar Turkey, dollar Rand, Argentina. Why hasn't that fed into U.S. equities this time?
I don't think that the U.S. banks have the same direct Turkish risk, and the Turkish risk is actually pretty. It's a pretty calculable risk. Turkey's not the biggest country in the G20. The amount of bonds that they have, the amount of loans outstanding is probably calculable. It's probably geographically centrally located in, Europe, in Spain and Germany as the biggest creditors to Turkey. So I don't think that it's going to be a big collateral damage to the banks over here. I think that they probably have, some of their own issues dealing with higher rates, which has kept them fairly well bid, and looser regulation, et cetera. So I feel like the picture is fairly okay. I'm not really bullish or bearish U.S. banks, but I don't expect to see really collateral damage over here because I think the problem is centralized.
Yeah, well, that's kind of what the story's been. And it seems as money pouring into the U.S. for the past number of months at the expense of the rest of the world. Commodity markets, with the exception of crude oil, haven't really performed well. Remarkably, a lot of correlations that you would have looked for in the past with U.S. equities have not worked well. And that's one of the key things people are talking about is the exposure. Where's the exposure? And it seems like a lot of it's in Europe. That said, we have seen sharp underperformance of, let's say, the DAX versus the S&P. Is that something you would look to continue, you think?
Yeah, I would imagine, I'm still I'm still a king dollar bull. I'm still, broadly speaking, the equity market is still in an uptrend. And while I'm not necessarily bullish the entire S&P index, I think that I want to keep my plays pretty centralized for the rest of the year. I still like energy stocks. I still like the cannabis names. I love the refiners, and I've got a couple of other plays that I'm looking at. But I'm not going to chase. I'm not going to chase Amazon. I mean, it's easy to be long Apple up here for me because I've got a different set of reasons. But I really don't want to chase the S&P beyond 2,900 with that problem in Europe and the VIX sort of pricing it in. I was talking with Larry before, and he indicated that VIX futures are showing an even higher price for the VIX, which is something that we should all keep an eye on as well. If we go out the curve and the VIX looks higher, that's obviously because it's pricing in more risk, and I would imagine that it's pricing in the kind of scenario where everybody comes back from vacation and says, oh shit, we have a big problem in Turkey that we have to address. And, we're kicking the crap out of everybody in the trade wars, and their currencies are coming apart. And so volatility could very well pick up in that scenario. And that's, like I said, why I can't chase the broader S&P up here. So
Yeah.
I'm kind of sticking to my name.
What you were just alluding to, spot VIX right now is trading 1251, whereas September VIX futures are trading at 1405. So that always trades at a premium because people are always expecting volatility, or typically are expecting the volatility to pick up. But $1.50 is pretty significant, and like you said, maybe over the long weekend with everything else going on in the world, that's pretty interesting. What about looking at your heat map? What sectors right now are catching your eye on what's doing well, what's not doing well over today and yesterday, things like that?
I'm enjoying watching gold stocks come apart at the seams. I really am. I've been bearish gold since it's been failing 1350. I finally got the beginning of the move down that I was looking for. And then as soon as I got the first leg of the move down, my whole entire Twitter feed lit up with everybody in the world defending gold. Gold is a buy down here. I'm looking on the platform that I contribute to on Real Vision, and I'm watching videos about how gold is going to bounce from here. And I'm getting emails from, all of my various different sources saying, is the time right for a rebound in gold? And I'm looking at these gold bulls like they're batshit crazy right now. I mean, gold is coming apart. It's a direct function of the weaker EM currencies right now. It's a direct function of the weaker yuan. And people are sitting here calling for a bottom in gold because they still think we have the same problem with mass monetization going on in the world to deal with a weak global economy. And that's not the story anymore. So I would expect that gold backs off well below 1,000. I think these metals and mining stocks are absolutely useless for the rest of the year. And I think GDX is probably going to be, somewhere between 12 bit and 15 by the time this is all said and done.
Yeah, that's interesting. It's funny you bring up gold. We've had Vince Lancy talking a lot about gold, and he falls under that first kind of mantra of what you were saying. He's supportive of gold. He does think, though, if it does get below, takes out the lows that we saw last week, or maybe it was 2 weeks ago, 1170-ish, when we had that kind of Asian sell-off, that it could get ugly. But yeah, there's definitely been a lot of talk about that, and it's a very interesting topic right now. And Mark Fisher actually has been on, though, saying that a lot of it also has to do with global, a lot of governments that are actually selling, whether it be Venezuela, to in a way pay for some of their uses.
It would not be shocking to see a country under stress lobbing out some gold reserves to get some currency back in order to fight the currency market. So that would not be surprising to me. And there's another major tell in the gold market right now, if you ask me, because the dollar index backed off from 97 to 94, and gold is still going down. So if you remember, while the dollar was rallying, it was knocking the emerging markets apart, and the gold was coming apart with it. Now we've got gold all the way back into support. And now we've got the dollar index all the way back into support around the 50-day moving average, and gold is about to get dunked below 1,200 again. So, I mean, the price action sucks. The market's long. The market's bullish. The market is focusing on the wrong story, and I'm just going to let it play out the way I see it because nothing has changed. I'm really enjoying being challenged by the gold bulls on the way down. Because the gold retracement rallies have been weak to none, and it just keeps making lower lows. So I'm going to continue to put up low prints when it gets on the lows and see if there's more selling down there, because I think at some point all of these guys that are chirping up about being long gold and how it's the right play are going to have to cash it in and say, you know what, I'm out.
Yeah. It's definitely an interesting one, and it's like you said, typically has a high correlation to the dollar. It's been underperforming based off of that as well recently. What about the transport stocks? Anything that catches your eye there?
Oh, they're very tricky. They're very, very tricky. I consider myself a sort of airline expert. And because I've had some of my best trades in my career in the airlines, I caught them on the whole way down. I caught them out of bankruptcy from the long side. And I made a couple of other plays in between. I can't get a handle on them. I can't get a handle on the airlines because they are going in different directions while the economy is strengthening and the oil price is rallying, right? That's proving to be a problem for American Airlines. It's not so much of a problem for Southwest and Delta Airlines. So I'm a little torn in the airlines. I look at the transports and I look at the rails, and the rail stocks just won't quit because that's a freight story. Right, that's a strong economy, a strong freight story. Norfolk Southern kind of, barely goes a week without making a new high. It's easy to stay bullish the rails. They're actually the sector that I've always said, gun to my head, with $1 to put in the market, I'd buy a railroad because I like the business premise. The tracks go down on the dirt. They pay us to move the stuff in the boxes on the tracks, and it continues to keep happening. So I'm always positive the rails, they look good. I'm positive the truckers, because there's a really, really tight scene going on in the trucking industry where there's a shortage of truckers. We've got booming freight in this country, so I guess I could be bullish the transports, but like I'm kind of mixed on the underlyings, Mike. You know what I mean?
Yeah, absolutely. That was very Warren Buffett of you. The comments you were just making before about the railroads, which has worked well for him recently.
They're great sectors. It's a great sector to trade. They're trending as beautifully as you can find in the stock market, right? They back off into moving averages. They hold every time, and it's almost obvious the day that they're about to re-lurch towards the highs. So, I love watching these pennant triangles break to the upside in the rails, like as a hobby. And I'm sort of somewhat invested in them in my longer term accounts. So I just look at it and smile.
I didn't see it actually. When all the trade war sort of talk was going on, especially with China, did the rails react poorly on the thought that maybe we would have less demand from other parts of the world, or was it unaffected?
No, I would answer that question emphatically no. The Norfolk Southern chart, the CSX chart from January 2016 to last sale, it goes bottom left to top right on my chart. If there was a visible pullback there due to China, I must have missed it. You know what I mean? It's the kind of thing where
I just brought that one up, CSX. Yeah.
Yeah, you know what I mean? They trend beautifully. It's usually the case of, if you get the chance to buy them deep into the moving averages, it's worth the risk reward. That defines a trend right there, and how many times you were able to buy the rails into moving average support.
Yeah, absolutely. All right. Well, that was really helpful. A lot of good information. Just some quick thoughts on what you're thinking today. That's really helpful. Thanks for the info, Tony. We'll talk to you soon.
Yep, we definitely will, Mike. Thank you.
All right. Talk to you later.
Take care.